Hey, welcome aboard. It's Walter here, and we're going to talk about making trading boring. This is a question that came through on my survey here. So, what I have here is I basically asked traders around the world, what are they working on? And so, this is a pretty common one, actually, and I'll share with you exactly what it says. So, this trader says that his or her biggest challenge is sticking to one trading system. I over risk or I take on too much risk when I am too sure of a trade. And I don't follow my trading plan because it feels boring to me. Well, first of all, I'd like to offer congratulations. if your trading plan feels boring to you, then that's a good thing. We're trying to get to that point. I've always said this for years that if you can get to the point where your trading is boring, that's good. Because what that means is you're more focusing on the execution rather than the excitement of whether it's a win or a loss. So that's number one. Number two is the big challenge here really is the risk. And so if you feel like it's boring, and I'm reading between the lines here, if you feel like it's boring because you want to risk a lot more and grow your account quickly, well, that's something that we're obviously going to talk about in the small account big profits course, because the goal is to take a very small account and ramp it up over 300 trades as quickly as we can. Basically take $1,000 and move it to 100 grand. Now, here's what's interesting about that. You can use the same approach with it doesn't matter, like any style of trading. So for example, if you have a system and you have a 30% win rate and you're getting 3-to-1 reward risk ratio, the question would be like, what's the optimal amount? Like, what should I basically do to ramp up that account as quickly as possible with no regard to drawdown? Now, I know this is pie in the sky because there's no regard with the drawdown, which is why we quit trading. We quit because of the drawdowns, right? So what you could do is, let's say you have 20 grand to trade. You could just take like $500 or $1,000 of that 20 grand and decide that you're going to get really aggressive with that. Now, knowing that you have a 30% win rate, essentially a good rule of thumb is you just go, if you want to risk the optimal amount, you just cut the win rate in half and you risk that amount, which is wild, which is crazy. You're going to have all kinds of nasty drawdowns and all that, but that's basically an easy way to get to that optimal amount. But remember, if you're only doing this with 5% or 2.5% of your overall risk capital, it's not going to hurt you as much if you lose the entire amount. And so this principle is really, I know some traders that use this quite well, actually. And actually, we did that. A friend of mine that I was trading with, he was really good at ramping up his trading accounts quickly. And that's why he would pull his money out every day, essentially. But he would always get to a point where he would have just a terrible loss. So when we gave him money to trade, what we did was we said, look, we have this amount of money to trade, 100%. We gave him 2% of our money, knowing that he was going to make a lot of money with that 2%, but we were also going to lose that account essentially, eventually, one day, usually within 2 months. But every day it was like clockwork. It was making money. So you're kind of using the same principle. So what I'm trying to do is read between the lines here with this question. And I think what this trader is really saying is, my system is good, it's working, but I want it to happen faster. And so that's one way that you can get it to happen faster. You simply take a small chunk of your trading capital, break it off, use the optimal risk amount, which is your win rate divided by 2. And I'm just using an example of a 30% win rate, but so you'd be risking 15%. You're going to have terrible drawdowns, but you're also going to have a little account that can grow very, very quickly. So that's one way to do that. I have another question here. I'm lucky that I get questions from all around the world, but let me share another one here. Okay, this is a good one. So I want to read my challenge this is the answer to the question, what is your trading challenge? And by the way, you can, if you want, you can go to fxjake.com and submit your own question. His or her, it's 80% guys, obviously, in trading, 20% women, but the women are the best traders. Reading the market to determine which direction the market will go, and if I should be in for a quick trade or if the market's going to trend for a while. Now, this is the age-old question, isn't it? We just don't know if the market's going to keep going. And the thing that I came up with that works the best for me is you simply decide that you are going to hedge your bets. So I wrote about this in the Naked Forex book. I don't know if you read it, doesn't really matter. But here's what's interesting. Let's say that you take a trade and it's a breakout trade. You don't know if that breakout's going to go for a long ways or if it's just going to fizzle out rather quickly. What you can do is you can decide that you will take a trailing exit position and you will take a profit target position. That's a great way to hedge your bet. So that's what I would suggest this trader do. Instead of hemming and hawing and trying to figure out if the market's really going to go or not, you can simply split it up, have a target, maybe 2R, 3R, 5R, whatever the amount is that you want to make on that target, and then your trailing exit. We've talked about trailing exits in another video. We talked about the moving average trailing exit, the chandelier trailing exit, the ladder exit. There's lots of trailing exits available to you, obviously. The 3-bar exit, there's lots of them. But the important thing to note here is that you can split it up, and that way you're always right. So the real thing here is, how do I know that I'm going to be right? And you don't know that you're going to be right. But I would say that if you look at the open position ratios and make sure that you're on the opposite side. So as we're recording it, as this video is live, a lot of the pound pairs are great trending pairs. They're trending downward because all of the retail traders are going long. So if you just Google open position ratios in Forex, like pound USD open position ratios, you'll see IG Markets and Saxo Bank and all the other brokers that offer that information, and you can see. So the point here is that you want to make sure that you are in the small group of traders who are going against the big group. So when you see 80% of the traders are buying the pound USD, you want to be in the 20% traders that are selling. And that suggests, and just look at the chart and see if it looks like it's trending, that suggests that there's a really strong trend because all the traders go against the trend. That's very typical. So hopefully that helps. We're going to use that trend trading strategy in our small account big profits course as well. So if you'd like to get more information about that, you can click the link below this video or above and get more information about small account big profits, which is currently open. I wish you happy trading, and we'll see you soon. Bye.